Welcome back to the channel. Today we're conducting an in-depth analysis of Duolingo's latest earnings results and future market trajectory. As a leader in the digital learning space, Duolingo's performance is a major indicator of consumer subscription trends and the scaling of AI-powered education. With the stock currently navigating extreme price levels and analysts adjusting their multi-year forecasts, there is much for investors to understand. Before we break down the charts, please like this video and subscribe to the channel for more professional market analysis. Let's get into Duolingo. We begin with Duolingo's current market standing on the Nasdaq. As of the latest reporting, DUOL is trading at $101 per share, marking a significant decline of 14% on the day. The chart highlights a period of intense selling pressure, with the stock currently breaking below its previous 52-week range, which ran from $104 up to $544. This sharp downward move has caught the attention of the entire tech sector, as Duolingo is now testing uncharted territory for many current investors. With a massive trading volume of over 20 million shares, the stock is seeing historic levels of activity as the market processes the underlying financial data and future outlook. This snapshot provides the essential context as we transition from price action into the fundamental earnings and forecast data that will likely determine whether Duolingo can find a floor or if further volatility lies ahead in the 2026 fiscal year. The earnings per share chart shows a company that has successfully moved into a sustained profitability phase. The dark blue bars represent estimated EPS, while the light blue bars show actual reported figures. For every quarter in 2025, Duolingo has delivered a definitive beat over analyst expectations. In the first quarter, we see a reported EPS climbing towards 0.65 against an estimate near 0.4. This trend of outperformance accelerated through the second and third quarters, with reported profits significantly exceeding the gray bars. Looking ahead to the end of 2025 and into 2026, the forecast bars point to continued EPS expansion, with estimates rising from 0.75 toward the $1 mark per share. This projected staircase of earnings growth reflects the market's previous confidence in Duolingo's ability to scale its premium subscriber base and monetize its AI features. The contrast between this strong earnings history and the recent price drop we saw in the market overview is a key point of analysis for every DUOL investor. The quarterly earnings surprise table quantifies exactly how much Duolingo has outperformed expectations over the last year. For the quarter ending September 2025, the company reported an EPS of 0.95 versus a consensus of 0.72, resulting in a nearly 32% positive surprise. The June quarter was even more impressive, delivering a massive 65.45% surprise, while the March report showed a 38.46% beat. These figures highlight a powerful beat and raise cycle that dominated the first 9 months of the year. However, if we look back to the December 2024 report, the company saw a negative 38% surprise, reminding investors that quarterly volatility remains a factor. The consistent high-magnitude beats in 2025 have been the primary driver of analyst optimism, forcing professionals to repeatedly raise their targets. Understanding the relationship between these historical surprises and the upcoming reports is vital for gauging the company's future momentum and its ability to regain market confidence. Looking ahead to 2026, the quarterly earnings forecast table outlines what analysts expect for the next several quarters. For the quarter ending December 2025, the consensus EPS forecast stands at 0.79 based on 6 estimates. The high EPS forecast reaches 88 cents, while the low end is at 73 cents. As we move into 2026, the consensus continues to climb, reaching 0.92 in March, 0.99 in June, and breaking above $1 by September and December. Notably, the revision data shows only one upward revision for the December 2025 quarter in the last 4 weeks, with no downward revisions across any of the upcoming periods. This relative stability in forecasts suggests that, despite the recent share price decline, professional analysts are currently maintaining their earnings expectations. The steady upward march in quarterly consensus through 2026 indicates a fundamental belief that Duolingo's growth engine remains intact, providing a high-confidence baseline for the company's near-term earnings potential. The long-term yearly earnings forecast paints a picture of aggressive profit scaling. For the fiscal year ending December 2025, analysts have reached a consensus EPS of 3.36. This is projected to grow to 4.01 by December 2026 and jump to 5.12 by December 2027. This represents a more than 50% increase in annual earnings per share over the next 2 years. Within this group, sentiment is stable, with one upward revision for the 2025 fiscal year in the last month and 0 downward moves. The high-end estimate for 2027 reaching nearly $6 per share underscores the massive earnings potential some analysts see as the company integrates more AI-driven learning tools and expands its language portfolio. For long-term investors, these multi-year projections are the core focus, suggesting that the company is expected to continue scaling its profitability despite any near-term market turbulence. The consistency of these upward yearly targets provides a clear narrative of a high-growth tech leader maturing into a profit powerhouse. The change in consensus chart visually tracks the stability of analyst expectations over the past month. For both the full fiscal year ending December 2025 and the upcoming December quarter, the bars remain remarkably flat. Comparing the 1-month ago data to 1 week ago and current, we see almost no variation in the height of the bars. This visual consistency confirms that recent market volatility and the latest share price movements have not yet triggered any major shifts in the consensus earnings targets among professional analysts. While there is no positive momentum driving the bars higher at the moment, there is also an absence of significant negative momentum pulling them down. This stability indicates a period of established equilibrium where the analyst community is satisfied with existing projections while they wait for the next set of confirmed results. For investors, this plateau suggests that the disconnect between stable fundamentals and falling stock price is a critical area to watch for a potential recovery. The number of estimates change table confirms this balanced sentiment with hard tallies. For the December 2025 quarter, we see 0 revisions up or down in the last 4 weeks. For the full 2025 fiscal year, the conviction remains strong, with 1 upward revision and 0 downward moves. This pattern of zeros across most categories indicates a broad consensus among the analysts covering Duolingo. It suggests that professionals are holding their positions and waiting for more clarity before adjusting their long-term models. While a lack of revisions doesn't provide a directional momentum signal, it does provide a sense of established market consensus. In an environment where the stock price is seeing extreme moves, this lack of analyst adjustment suggests that the financial professionals studying the company have not yet seen a reason to change their fundamental view of the company's earnings power. This tally serves as a final confirmation of the holding pattern currently seen in the professional financial community as they look toward the 2026 fiscal performance. Finally, the estimate momentum text summary provides the precise detail behind these analyst shifts. For the fiscal quarter ending December 2025, the consensus EPS forecast has remained stable at 0.79 over both the past week and the past month, with none of the analysts raising or lowering their targets. For the full fiscal year ending December 2025, however, there has been a minor but positive adjustment, with the consensus climbing from 3.35 to 3.36, a 0.3% increase over the last month. The summary explicitly notes that one analyst raised their forecast during this period while none lowered it. This stable to slightly positive momentum state suggests that the professional community remains cautiously optimistic about Duolingo's full-year potential. Estimate momentum is often considered a leading indicator for stock performance, and the lack of downward pressure in these targets stands in sharp contrast to the stock's recent price action, indicating a significant divergence between Wall Street's models and the current market sentiment. In conclusion, Duolingo's earnings profile reveals a company with a strong history of performance and an optimistic long-term growth trajectory through 2027. While the recent price volatility and breakdown below the 52-week range have been significant, the analyst community remains remarkably steady in its earnings expectations. The consistent beats seen in 2025 and the rising multi-year EPS forecasts provide a powerful fundamental foundation for the company. As we move forward, the key narrative for investors will be whether Duolingo can continue its execution and regain the market's favor. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on Duolingo and the broader tech markets. We'll see you in the next analysis.